Hi, Vi from myfractalrange.com here. It's been a while since my last process review video. A lot of interesting things are happening in the markets. So let's jump in, and we have a lot to talk today. So first of all, markets are ripping. This rally continues. All major stock indices are bullish. Even TLT is neutral, but at the same time, stock-bond correlation is positive. So stocks and bonds move into the same direction almost every single day. When stocks are up, bonds are up, and when stocks are down, bonds are also down. I expect this relationship to continue. So first of all, let's jump into myfractalrange.com. Here I have my important to watch list. Yeah, so these values are real time. Currently it's Friday, August 12, 2022. Markets are already closed. The markets closed 35 minutes ago. So let's check the recent data. If we filter all the signals based on upside-downside ratio, we will see that XLU is a winner here. Also, TLT has 1.60, but it's still neutral trend. The lowest upside-downside ratio is XLF, TNX, which is of course the US 10-year, but it's bearish. So actually, low upside-downside ratio is exactly what I want to see. First of all, let's see a couple of interesting things. So first of all, SPY turned bullish on July 28th. Then IWM turned bullish on July 27th, and the QQQ also turned bullish on July 28th. So July 28th was a very important day, and for now this trend is continuing. So of course, based on signals, I should have bought stocks on July 28th, but of course I will not do it because my bias is bearish based on macro fundamentals and overall. So that's why even though I never go against signal, but not always I go with a signal. So this is another reason why I'm sitting in cash. So since my last video, nothing has changed from the portfolio perspective. I'm sitting in cash. XLU IWM spread is hedged. So if we go to trading view and let's check the weekly, you can see that XLU IWM spread is down 160 basis points over this week. So since I hedged it, it's down like another 400 basis points. So opening hedges was a good idea from risk management perspective. I expect though that next week maybe I will get a chance to remove those hedges and maybe the spread will start working. But of course, let's wait and see, because for now all the signals are not in favor of this spread. So overall, this week was great for bulls. So SPY is up more than 3% this week. QQQ is up actually 2.7%, and IWM is up 5%. So small caps is a winner. At the same time, volatility is relatively low for this regime. So VIX is at 19.5. In my last video, I talked about the width of ranges. I talked that volatility of the overall market is low and ranges are narrow, and actually currently situation is exactly the same, so nothing changed. So of course, for me to act on a bearish side, one thing I want to see is the ranges getting wider, and I want to see the reversal signals in VIX. If we go to myfractalrange.com, back into my watch list, we can find where VIX is located, and you will see actually that that range is still very narrow. So currently low end is 17.7, top end is 22.12. Okay, so first of all, today I wanted to show you a couple of charts. Hopefully those charts will help you to understand correlations even better, because of course the main point of those videos is to help you understand all the signals and help you to interpret them correctly, and to help you to build your own process based on all those signals. Okay, so when I look into correlations, I usually look into two main indices I created. So these are average correlations, and I have two averages. So of course, both of those averages you work with SPY sectors, so things like XLE, XLU, XLC, and so on. So all 11 SPY sectors, but I measure those averages in two different ways. So first average is how all SPY sectors are correlated together, one to another and one to all. So it's not correlation to SPY or something, it's just how all those 11 sectors are correlated together. So now I will run my script and we will see some charts, and I will explain what I do and why I'm looking at those things. So first of all, this red line is SPY index, and this blue line is 30-day average cross-sector correlation. So basically it's the average of how all the S&P 500 sectors are correlated together. This chart is 30 days. So if we zoom in, let's say from 2020, it will be easier. So currently cross-sector correlations are still not extremely high. So you know that I'm always talking about wanting to short the market, or basically that I expect reversals when correlations are going up. Now those correlations are still not extreme. What I want to see is at least those correlations starting to go up. Of course, I talked about that in Twitter Spaces this week, that it's not a good idea to wait for those correlations to become extreme, like 90 or so, to act, because then this indicator will be a very lagging indicator. But how to make this indicator coincident, not lagging, is basically monitor the rate of change and the direction of this of those correlations. So for me, at least, I want to see those correlations going up. And for the last day, those correlations are slightly going up, but still it's not enough to convince me. Because you can see, let's say, if we see what happened in March 2020 during, of course, this COVID crash, you see that those correlations went extreme, but actually the top of the peak of this index was almost exactly at the time when the market bottom was reached. So yeah, of course, if you just wait for extreme values, it will be a lagging indicator. But also you can see that before that, when market just started going down a bit, those correlations started going up very aggressively. So that's what you want to see, rate of change and the overall direction. And of course, correlations are when correlations are going down, usually market goes up and so on. So this index is also negatively correlated to the market. Okay, so this is an example. Then, so this is cross-sector correlations, how all S&P sectors are correlated together. Now I also have another index. It will also be 30 days. This one is a bit different. Basically, it's the average sector correlation to the S&P 500, so SPY in this scenario. So basically what I'm doing is calculating 30-day correlations of each sector to SPY, then adding them up and dividing by the number of sectors. So it's an average, and averages can be used and actually work quite well in stationary time series. So of course, don't use averages on price or any other trending time series, but on stationary time series it can be used for sure. So of course, it's always positive. You see that there are no negative values. But at the same time, you can see basically the same situation. Basically, the movement of this index is almost exactly the same compared to the previous one I showed with cross-sector correlations. Just the relative nominal numbers differ, of course. But we can see the same thing. That average sector correlation to SPY is still not high, and even though today it went up, but I want this direction to continue. Yeah, so of course correlations are not proprietary. If you have any questions, feel free to always ask, and I'm sure that you can come up with something similar yourself. And yeah, hope it helps. So okay, so now we talked about MFR signals, correlations. Now let's start with our regular process. So of course momentum, correlations, and so on. We will first start from time series momentum, and as always we'll start from SPY sectors and our stuff, and first chart will be 30 days. One thing to note, of course, from my tweets and overall market action, I'm sure you already know that all indices are basically positive on all time frames, so we will see the same thing here. So of course this is 30-day momentum score, so of course IWM is 1.8, QQQ 1.5, and SPY 1.5, so basically stocks are strong. What has weak momentum? So gold over 30-day basis, it still has a negative score, but it's a very low, so let's call it a neutral momentum. Silver slightly positive, but not very strong. Bonds slightly positive. Yeah, but basically you can see that stocks have a really positive and strong momentum here. Okay, let's move to 10 days. Yeah, here we go. Okay, 10 days, situation is a bit different because, for example, GLD is quite strong on 10 days, and bonds are quite negative on 10 days. So GLD has 0.85 and bonds have negative 0.35. But yeah, QQQ 0.7, SPY 0.7. So yeah, IWM 1.2. So IWM is the strongest, not only on 30 days but on 10 days also. What else can we see? Dollar neutral, slightly negative. Yeah, and XLE is actually totally neutral. That momentum score is 0.01, so let's call it a 0. XLU is quite strong. Financials quite strong, and yeah, so you can see, you can stop the video if you want to study this further, and also you can find those charts on my in my tweets on a daily basis. At least I try to post those on a daily basis. And as always, we will also check what's going on a 5-day basis. Yeah, okay, IWM, silver 1.2, IWM 1.2, DIA 1.1, SPY 0.93. Yeah, so basically QQQ 0.56, so stocks are positive on all the time frames. Bonds are negative, minus 0.28 on a 5-day basis, and dollar is also negative. And of course, we know why. We know what happened with the dollar. And, I believe today it went up, but over this week it went down. So yes, financials are really strong, and energy is actually strong on 5 days. So that's how we spot the possible reversals, and of course, that's what happened with price of oil and XLE itself. So that's why I monitor multiple time frames to spot differences, because yeah, on 10-day basis we had a totally different situation, but on a 5-day basis XLE is quite strong. What we have with gold, yeah, gold is also positive on 5 days. Okay, now we will go to developed markets. I'm sure we will spot something interesting there. Yeah, so first one will be developed markets 30-day momentum scores. Okay, of course, SPY is also included here. So on a 30-day basis, it's 1.5. So you can compare ours to the SPY as well. So EWS is 1.6. EIS Israel is 1.9. What has a negative score? Voila, Hong Kong. We talked about Hong Kong in previous process review videos. First I was bullish, then signal changed. Now I'm bearish on it. Yeah, but that's exactly what happens. EWJ 1.2. Yeah, but as you can see, basically all scores are positive on developed market basis except the EWH. Yeah, so China, Hong Kong, yeah, those are not bullish at all. At least for now, from the longer term signal perspective. Let's see what's happening on a 10-day basis. Okay, nice. Yeah, so Israel. Yeah, I remember this week I was checking those signals on almost on a daily basis. Yeah, I remember that Israel is very strong. So 1.7 on a 10-day basis on EAS. Hong Kong is actually neutral on a 10-day basis. EWS is also strong. So basically EWS and EIS are strong both on 30 and 10-day basis. Eden is actually negative with negative 0.25. Yeah, EIRL is 1. Yeah, but also you can see same situation that majority of scores are positive, but of course on a lower time frame like 10 days, those scores are lower, except of couple of examples, of course. Yeah, but still positive, so not a lot of negative momentum in stocks. And developed markets 5 days. And here it is. Yeah, voila. So EIS incredibly strong, 1.9. Other numbers are lower, but no negative numbers at all. So yeah, even EWH is positive, but compared to others, the score is quite low. Yeah, but yeah, stocks got a great week this week, so no surprise that all momentum scores are positive. It's been a while since our last video, so let's make it a bit longer and let's not skip emerging markets. So let's check what's going on emerging markets, and then we'll move to commodities. Okay, so emerging markets 30 days. Oh. Okay, yeah, so same situation as with EWH, basically FXI, yeah, so China is negative 0.91, and of course no surprise here. AGT, momentum score of 2, and yeah, same situation. ICOL has a low positive score of 0.3, but basically same situation. Equities are quite strong, and I expect equities to be strong on both 10-day basis and 5-day basis also. So yeah, so this is the 30-day. EWZ also looks good. ECH, EADO. Yeah, so emerging markets 10-day basis. Yeah, and no surprise, of course, China is slightly negative. Basically, we see when I talk about China and Hong Kong, basically correlation is between the two is so high that basically it's almost the same thing. So yeah, we see exactly the same situation. I believe Hong Kong on 10-day basis was also had a very neutral score, and I expect it to be positive on 5-day basis, same as Hong Kong. AGT 1.7, EPHE 1.6, EWZ looks good on both 30 and then 10-day basis, of course. Yeah, QAT 1.2. Nice. Then we'll talk what we can do with this information. So 5. Okay, so yeah, FXI. Well, actually, I believe WH was 0.4. FXI is only 0.07. So FXI is neutral on both 10 and 5 days from a momentum score perspective. EWW 2.3, EWZ 1.6, EZA 1.9. Yeah, AGT is negative also, so worth mentioning here. But yeah, majority of emerging market sectors are country ETFs are also strongly positive here. No surprise, of course. Okay, and the last one in the momentum space will be commodities. Yeah, so commodities 30-day. Let's go. Yeah, so with commodity situation is a bit different. So of course UNG is to 2.2, which is the strongest of the pack. I see COW and CUT also quite strong. Wood and URA also, but other than that, palladium maybe. But yeah, oil negative, wheat negative, CANE negative, DBC negative. Yeah, so what stands out here is of course USO. We will see how short-term momentum scores look like. I expect those to be different. Yeah, but USO has quite a negative momentum, and of course, no surprise with current gas prices and inflation reading. Yeah, no surprise. 10-day basis. Okay, BAL 1.5. Oh, CANE here looks quite good on 10-day basis, 1.3. PPLT 1.4. USO is still negative, no surprise. Of course, yeah, silver positive. Actually, not a lot of negative numbers on a 10-day basis in the commodities. I don't see very good candidates for pairs here. Maybe we'll see 5-day scores, but maybe palladium can look good, or UNG against USO also maybe. I need to monitor that spread. Actually, UNG versus USO can be added to watch list. Five days. Mm-hmm. Yeah, yeah, that's what I expected. USO is strong, positive on 5-day basis, but UNG of course is also strongly positive. BAL looks really good on both 10 and 5-day basis. Uh, and yeah, and as we can see, this week was quite good for commodities as well, because I don't see any negative readings here. Yeah, so what we can do with this information, since we are done with the momentum, so what I think that EIS is a good candidate on alongside for a spread, so I will put it into a watch list. And some countries, some other Asian countries, maybe even China or Hong Kong can be added as a potential short. Of course, first of all, we'll check those signals. Yeah, now let's move to the correlations, and then maybe we can do it now. So I said that EIS and for example EWH and what we can see. Yeah, okay, almost cycle highs. Yeah, of course the spread was higher in, oh, it's 2010. Okay, so we're not quite interested in those, but yeah, I expect that spread to be a bullish trend, and I will see the signals on that, and maybe it's potential candidate to be added on a watch list. And from commodities side, I wanted also to check like okay UNG and USO, and this is actually good, also good macro spread on energy. So I hope you'll have your own ideas what to do with all this information and how to combine different pairs, and maybe you will spot something different and something interesting. And of course, if you ever spot, let us know on Twitter. Yeah, so this spread is also mooning actually. Almost cycle highs, and last time it was higher was like in 2020. Okay, nice. EIS China also looks quite interesting. Okay, yeah, so sorry for that. I hope it's helpful. Now let's move to correlations. Yeah, so let's move to the developed markets. Uh, for SPY sectors and other stuff, you can find all those matrices on my Twitter profile. I tweet them daily, so we will skip that. Okay, so here is 30 days. What we have here is basically, yeah, so on a 30-day basis. Let's check the correlation to SPY. EWH has the lowest correlation of 0.27, EIRL 0.84. Overall average correlations are also low. We can see that average is maybe 1.6 something, so it's quite low. Of course, it's been lower, so going up slightly. So the risk in developed markets is building, but at the same time, from momentum scores, we can see that basically equities, international equities, move almost in the same direction as SPY, and we can see that from this correlation matrix as well. So yeah, except EWH, of course. Also, EWH is has very low correlation to some other countries. So Eden 0.3, EWJ 0.34, EWL 0.29. And yeah, of course, we talked about SPY, which is 0.27. Yeah, so EWH is interesting from this perspective as well. And of course, at least for now, I think that it's a good candidate, but not on a long side as it was before, like a month or 1.5 months ago, but maybe on a short side. So let's check the 10 days. Yeah, so EWH, here it's a bit higher, but still low, so 0.38. But look at Eden, which is 0.15, so very, very, very low correlation to SPY. I will take a look at it now. So what if we do one thing? Yeah, let's go to tradingview.com and let's say Eden versus EWH. Yeah, of course, those two ETFs are not liquid. We already know that from my spread with EWH, so it gaps a lot. Yeah, I don't think actually that it's a good trading candidate. But if the signal is right, I think that spread would be on the long side, not on the short side. So long Eden, short EWH. Yeah, but I don't think that this illiquid spread is very interesting now. Of course, volatility is of this spread is quite high just because that, not only because of overall performances of both Eden and the EWH, but because of lack of liquidity as well. Okay, let's move to 5 days. And again, if you find my rambling useful, let me know. And if you want me to talk about some other things, also feel free to let me know on Twitter. If you have any questions, also do that, because my goal is that those videos, I want them to be useful. So if I can make something else to make those videos more useful, just let me know. On 5-day basis, correlations are quite high. Yeah, and actually the main explanation why it is so is because this week was incredibly strong for equities. So almost all equities went down. Went up. So yeah, EWP, WH, Eden. So maybe Eden, EWH can be candidates to take a look at. But of course, we know that liquidity and gaps and high volatility can be an issue, because, for example, EWH has a negative correlation to Eden, and actually that's it's negative 0.32. That's what I want when I choose candidates. Also negative correlation to Norway and negative correlation to EWP. Actually, we can take a look what's going on with EWP. Maybe it can give you some ideas. So EWP versus EWH. Also, maybe on a long side if the signal is right, but a lot of gaps. So those CTFs are not really liquid. Of course, main difference here is also different trading hours. So of course, when Eden opens, EWH is trading for a long time, and when EWH trades, Eden is not even open yet, because then when it's a trading day in Hong Kong, people in Europe are still sleeping. Yeah, so you need to be very careful with those spreads, and sizing must be even lower. Let's take a look on a rolling 5-day basis here also. Maybe we will spot something interesting here. I explained what all those numbers and rolling 5 days correlations mean in my first weekly process review video. So I encourage you to watch that if you haven't seen it. Because in my first video I tried to explain all those signals, what they actually mean, and now in my current videos I'm just talking about the signal values and what they are telling me now. So if you want to get a deeper understanding on how to use those, my first weekly process review video is what I recommend to watch. So first of all, Norway and EWS negative correlation. Actually, WS has a negative correlation with a lot of things, as we can see here. So for example, if you hold your trades if you do swing trading for 5 days or more, that's when those correlations really matter. So basically, you can expect EWH to move in the opposite direction over any 5-day period now. Compared to to most of our assets. Yeah, and let's do emerging markets, and then we'll sum everything up and we'll see what we can do with that. Okay, emerging markets, 30 day. On a rolling 5-day basis, overall correlations are not really high. So of course China is the lowest, even if you hold trades for longer. For example, India and China has almost no correlations at all, but actually I don't see a lot of negative numbers here on a 30-day basis, and it's normal. Maybe we will see some negative numbers on lower time frames. So daily returns correlation, yeah, China has a neutral correlation with India as well. If we talk about correlation to SPY, so of course China is 0.32, QAT is 0.36. and overall correlations are quite low, so I don't see any interesting signals from 30-day perspective here. Let's take a look at the 10 day. Okay, on a rolling 5-day basis, we see some interesting negative values. So, of course, if you hold those two for longer periods, so yeah, China has a strong negative correlation to SPY, which can be an interesting idea for your watch list if you want to try to monitor those spreads. That's what I would do. Also, India and China very strongly negatively correlated. We can actually take a look at the chart. So, in the FXI, I believe, yeah, of course, on a daily basis, this spread went up for the entire month of July, basically. That's also a great tool to see what's going on internationally and where the money is going. Okay, 10-day daily return correlations. FXI also, no surprise, 0.26 and negative correlation to India, minus 0.46. If we monitor SPY correlations, yeah, so FXI is the lowest. EPHE also has quite low correlation. That one can be interesting, in QAT, of course. Yes. And the last one, 5 days. Then we'll check what's going on from the Hurst exponent perspective, and we will finish this video. Yeah, so on rolling 5 days, quite a lot of negative values. So FXI 0.4 to SPY, but AGT negative 0.54. FXI has a negative correlation to QAT, and as you can see, AGT, the first row, basically is negatively correlated to majority of the assets. So AGT also, if you want to find opportunities, I would check AGT and maybe EPU, FXI, QAT, and yeah, some others, as you can see. But remember, rolling 5-day correlation is only applies to holding positions and how they move in any 5-day basis, not on a daily basis. If we talk on a daily basis, 5-day return correlation, FXI almost no correlation to SPY. In the INDA has a strongly negative correlation to FXI, negative 0.55, KSA also. If we look into AGT correlations, actually on a daily basis those moves are positively correlated, but as you can see, if you hold them for longer, you can expect some deviations, and actually that correlation is negative. Okay, so hope these are helpful. Now let's filter the watch list on a Hurst exponent perspective, and yeah, I will do it now. So, where is this watch list? Important to watch. Those all are real-time data. Let's wait for them to load. I don't know, I was logged out. Yeah, I was logged out. So from Hurst exponent, yeah, so EWH, EWO spread, which is currently significantly bearish, so it has a very strong Hurst exponent. Also XLU, 3-month Hurst is 0.82, XLE has a strong Hurst, and actually strong Hurst on XLU, and it being bullish, of course, also gives me some positive signs about that my spread, and now it's all about the patience, because I still don't have a signal to remove my hedges, because as you can see, XLU IWM spread now is bearish, and yeah, so that is one reason why I cannot remove hedges now. But overall, I expect that I will get a chance to remove those hedges. I don't know, maybe it will happen next week, maybe not, but I still have those hedges, and I still think that from macro and fundamental perspective, it can be a good trade in the future, of course. Actually, okay, gold has 3-month burst of 0.73. And the most choppy assets, well, of course, volatility. Well, volatility historically is mean reverting, so any values above 0.5 are historically not what you want to expect, but still, Hearst exponent on VIX is low, 0.53 or 0.62 on 3-month basis. And yeah, so these are the signals. So now what can we do with this information? So to sum things up, of course, momentum is positive for main indices. Momentum is positive. Short-term stock bond movements are also highly positively correlated. So bonds and stocks move together. I expect this relationship to continue. That's why, for example, I expect if we get another chance to short the market, and if we get another bear market down move, I expect stocks and bonds to fall together. That's one of my expectations. Of course, yeah. So I don't expect, for example, bonds to go up if stock market sells off. Yeah. So from momentum perspective, yeah. So Israel looks really strong. I will closely monitor what happens with Hong Kong and China. Because the volatility is quite low in my options book. I never talk about my options book. I think of it as a totally different animal, but I have an iron condor trade on SPY. I believe it's 440, 360 iron condor. I opened it a couple of weeks ago, and now it's decaying slowly, so I will close it soon. But the main reason why I opened that trade was, of course, I expected that range to continue, and at least for now, SPY is within this range, so everything is fine. Yeah, and the main reason why I never talk about my options book, because I still think that for majority people it's not what majority of people needs to do. But of course, if you are interested about not only about my long short macro and macro book, but also about my options book, also just let me know, and maybe I will show you some examples of what I do, how I sell spreads, mostly iron condors or credit spreads, how I sell puts to acquire my long positions when the timing is right and when I want to buy something, and so on. So yeah, of course, if you're interested in that, let me know. And also let me know if you need me to repeat this thing over and over every week, or not every week, but whenever I do those videos, because my process is quite repetitive, which of course I think is an advantage, and I think that's exactly how it should be. You must have clear rules and follow them. Okay, so yeah, thanks for watching this video. I'm waiting for your feedback, and good luck. Manage your risk, and I wish you all the best. Bye.